Nothing in the world can take the place of persistence. Talent will not. Nothing is more common than unsuccessful men with talent. Genius will not. Unrewarded genius is almost a proverb. Education will not. The world is full of educated derelicts. Persistence and determination alone are omnipotent. The slogan, "Press on," has solved and will always solve the problems of the human race. President Calvin Coolidge. And President Coolidge is 100% right. The most powerful thing is persistence and determination. If you are persistent and determined to learn how to read charts, my friends, you can do it. And how do you do it? Every day. 10 to 15 minutes, that's all we ask. Stay with us. We will continue to chart these markets every single day. And the lessons we teach, I think you'll find invaluable. Let's keep pushing through. Now, we had a great Patreon call today, talked about all sorts of interesting stuff. I would direct our Patreon members, please be sure to listen to the special recording we did for you guys on finding charts to track and the lessons that we teach on being able to look at any stock or ETF and determine whether it's something you want to start practice trading because it is trackable. And that is a special training we have for those Patreon members. What do we have for all the rest of you today? Lots of good stuff. The markets are exciting. A lot of things going on. Stocks are way down for the day. Bonds up a little bit. Gold up nicely. So let's jump into these charts. We're going to start, as we always do, with the S&P 500. Of course, got really close to crossing over, going up back on the 20th of September, the week ending then, but just not enough power. What did it do? Started pushing away, bouncing off that red signal line. We see the price percent oscillator heading down, derivative oscillator heading down, and a strong down, weekly down candle is forming. Now we go from the weekly chart to the 2-day. What do we see going on there? Well, we had a 2-day crossover that's now confirmed. How many of you looked at the market around 355 knowing this was going to happen to look for a potential jumping in point for a down practice trade? I hope you did. I hope you noted 355, what the market was doing there at that time, right there toward the end around the 292 mark. We're going to see how well that trade tracks. This is something we've started doing here of late that has been working again and again and again. Now, those of you who are jumping into that, you might be asking, well, okay, we're establishing a simple jumping in point for a practice trade. When do we get out? Well, folks, that's the magic question, isn't it? We'll talk more about that as we go along. If you'd like to read our book, we have copies of that available for you. Autographed editions, ready to go out the door wherever you may be. Look in the show notes. You'll see a link to purchase Charting Your Way to Wealth. If you live overseas, email us, Simon. I will get your invoice out to you today. And again, we'll send an invoice, a PayPal invoice to our friends living overseas. For some reason, Square won't clear that. I'll give you some hints about what we do in order to find jumping out points. First, when you first go into your down practice trade, set a sell point, or up practice trade, whatever it might be, set a sell point where you've seen the average moves over the last few weeks or last few months. Or if you've tracked back and you actually have a trader's almanac that you've collected and you've learned how perhaps the SPY does during this time of year, say the month of October, as we're sliding from the summertime trading zone into the fall-winter trading zone, you might say, I'm looking for a 2 to 3% gain on my practice trade. So guess what? You go ahead and set a sell point at a 2 to 3% gain. Maybe at 2% you sell half and you have the other half set to sell at a 3% gain. Again, if you're using options, you would have different numbers there. But you can also, again, stay in a trade based on other parameters, such as when your 4-hour chart crosses over, say, the 2-day trend line. Now, what is all this based on? It's not just random. It's based on your practice trading over and over and over again. The ETF knowing why you are setting your points for getting out, how much it tends to run on average during that time of year, and what types of indicators indicate to you good reasons to get out. A pullback and crossover going down on the 2-day chart, a pullback and breakthrough on the 2-day chart of the weekly trend line. There's a number of reasons you can set up. You set those up based upon your experience. That's why we say, my friends, 10 to 15 minutes a day, every day, practice trading as often as possible. And again, I can't say it enough. How do you get to Carnegie Hall? Practice. How do you get good at stock charting? Practice. That's what we're all about, sum and substance of all we do. So we see derivative oscillator heating up, price percent oscillator spiking down on the 2-day chart. What do we see on that 4-hour chart? Lots of movement in the morning, followed by more movement down in the afternoon as the S&P just rolled over. Now, we're going to leave the weekly chart, go to the Qs. What do we see going on there? Remember when the Qs crossed over? We'll see that in a minute. I've actually been tracking this, as you know, guys. I did a practice trade originally for you, ask you to do the same one at 189.56 on the 2-day chart when that crossed over on the 26th of September. We'll look at that in just a minute after we glance quickly. Weekly candle so far, red down candle, nice long wick on the bottom, little bit of a wick on top. We see the price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. We look at the 2-day chart. When we had that 2-day crossover, our jumping in point for that down practice trade, 189.56. And of course, how far did it plumb down during the course of the day? All the way down to a low of 183.02. If you had put in a 2%, even a 3% up and out practice trade on PSQ, you would have cleared that. You would have cleared that actually in the morning on Wednesday. So again, why was I looking for a 2 to 3% gain? That would be because that's what I have seen occurring on these previous moves. And of course, it worked yet again. So again, I want you to practice these trades. How do you do it? Use the trade worksheet. Fill that out. Jump into these trades. Practice them. When they work, wonderful. When they don't work, analyze why they didn't and adjust accordingly. It's called complexity theory. We use it. It works. Again, our goal is to be able to properly track price movements. It's that simple and it's that complicated. Derivative oscillator gaining downward momentum, price percent oscillator spiking down on the 2-day chart does have on the Heikin-Ashi candlestick that annoying wick on top. But again, things aren't perfect. What do we see on the 4-hour chart? Down movement in the morning followed by more down movement in the afternoon, gaining momentum, price percent oscillator heading down, derivative oscillator going down. Now, with all these moves, what might we expect at this point? Markets just to burn off forever? No. I'm guessing now that we've seen a 3% movement or so, could have a pullback. Could keep going for a little while, but again, the market's been going in 2 and 3% stutters. That's why I've been happy to try to get a 2 to 3% gain when these things happen. So again, watch for that. Pay attention to it. Let's see. And again, you don't just have to pull out for that reason. I want you to establish reasons to get out of trades, just like you establish reasons to get into trades. You don't want to lose what you have hopefully earned in your practice trade. Let's go now to 20-year bonds. What do we see there? Up 0.24%. We had a weekly vertical crossover, didn't we? That actually occurred. Well, let me get back to the, I must have moved my, there we go. Okay, we had the weekly vertical crossover occur at the end of last week, the 27th, Friday the 27th. I don't know how my weekly vertical crossover got moved. I might have done that to be able to see a candle, but let's get back to it. We had an up week last week. We talked about that. And we have had a green spinning top, open box up week so far this week when we look at the candlesticks. Now, we see, however, that the price percent oscillator is actually pulling away slowly from the red signal line, and the derivative oscillators gaining downward momentum, even though we have two green up candles. What does that mean? Well, let's go to the 2-day chart. 2-day chart is flat. We can see where the 2-day chart bumped up, and it really topped, well, the last big green candle was topping back on Tuesday the 24th, and it's really been sliding sideways since then. We can see that also in the 2-day price percent oscillator. Still negative though. The 2-day chart is still negative on bonds. The derivative oscillator still negative, although it's losing momentum each 2-day candle. And we go to the 4-hour chart. What do we see there? Again, what I'm waiting for is for it to roll over. If it does, before that 2-day chart goes positive. Now, we had a strong up movement yesterday afternoon, that's Tuesday afternoon, and then up movement in the morning on Wednesday, and then really sort of staying about the same spot in the afternoon, not going to a higher high. As far as the wick goes, price percent oscillator is just about flat. Derivative oscillator is flat. What's going to happen? I don't know, but you know what I'm waiting for? If we see TLT roll over going down on the 4-hour chart, I am pulling the trigger on a down trade on TLT, a practice down move. What will I be looking to get into for that practice trade? I'm going to look at TBF, and that is the single short of TLT. Now, is that going to happen? I don't know. But if it does, I'm ready. I'm waiting. I want to pull the trigger on that practice trade if it makes itself available. Really want to. It may not. I can't force it. I may want it as hard as anything I want. But let me tell you, you can't force the market. The market will beat you every single time. You just got to follow the charts, not the noise. Follow the charts, not the noise. Follow the charts all the time. Let's go to gold. What do we see happening with gold? Gold also crossed over at the end of this prior week on the week ending Friday the 27th of September. And it's putting in a red down candle. A nice solid red down candle with no wick on top and a nice wick on the bottom. Price percent oscillators pulling away from the red signal line. And we see the derivative oscillator gaining downward momentum. Isn't that pretty? We go to the 2-day chart. Gets a little more complicated. We see that the derivative oscillator is a little less than flat. It's losing a little bit of momentum. The price percent oscillator is not going down at the same strong angle it had been. We have a green, solid green candle with a bit of a wick on top and a wick on the bottom. Now, it's not an open box strong up movement. It's a cautionary candle, cautioning you as to further down movement, saying, hey, things aren't looking so good, but still moving down. We go to the 4-hour chart. This is where we see the problem. We saw that on Monday, the market trundled down hard in gold. And then it stopped on Tuesday morning. And then up Tuesday afternoon and on Wednesday, actually proceeding to go all the way back up and a little farther as to when it started moving down on Monday. What's going on with gold? Is it going to cross over going up awfully close to that on the 4-hour chart? Don't know. Going to wait and see what there is to see what the market shows us on on Thursday after Wednesday's strong up movement. So we're going to pay close attention to what happens with gold. Gold is still primed for down movement according to the 2-day and the weekly, as is TLT, 20-year bonds, still primed for down movement. We see, of course, that the Qs, that play still underway and just had one start on the S&P 500 going down. Now, does this disturb you a little bit? We're hoping that we're going to see more down moves in the S&P and in the Qs, while at the same time we're hoping for down moves in bonds and maybe gold. Typically, not everything moves down together. So we're going to carefully watch the charts. Usually they go in opposition. Stocks go one way, bonds and gold another. So we're going to watch the charts and let them lead us. With the strong down movement we've already seen in the Qs, there might be a pullback coming. So keep your powder dry. Get ready to do your practice trades. Those that you're in, watch them carefully. Check out the markets in the morning after idiot hour or maybe just around noon and toward the end of the day. See what's going on. Learn from this, my friends. Learn. And the only way you learn is by doing, is by practice trading. Use those trade worksheets, daily market worksheets, weekly market worksheets. Buy the book if you haven't already. And again, if you're interested, Patreon membership is available. Follow the link in the show notes. Lots of great benefits. We just finished our quarterly chart review for those of you who want to practice long-term investing. We've got those, and just what we're talking about there is being able to use the S&P 500 for long-term tracking and training. So please pay attention to that also. That's available for our Patreon supporters. God bless, my friends. All the best from the whole team at Charting Wealth.